Hey guys, welcome back to another video. Today we'll be taking a look at Crocs. So starting off by looking at their PE ratio, it's currently at a 6.63, which is always a great first sign as you want this to be around 20 or less. And seeing if they offer any dividends, they currently don't, which is perfectly fine as they'd probably rather reinvest all their extra money back into the company. Getting into the income statement now, I want to start off by looking at the revenue. As of the most recent year, they're bringing in 2.31 billion, which is great as it's up about 1.3 billion from 5 years ago. Now, checking out their net income, it's looking even more impressive than the revenue as this has been more than doubling every year. And the last thing to look at on the income statement is the shares outstanding. So this is something you want to have decreased. The more it goes up, the less your shares are worth. And as you can see, it's down from 2017 by about 10 million, so hopefully they can continue doing this going into the future. Moving into the balance sheet now, I want to start off by looking at the current assets. So the current asset growth looks great as they brought this up to 666 million, which is an increase of 57% from 5 years ago. And now with the current liabilities on the other hand, as of 2021, they're at 388 million, which is nice since they have 278 million more current assets and current liabilities. The last and one of the most important aspects to look at in any company is the free cash flow. So cash flow is important because companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest into future growth, or pay dividends. So this is clearly something you need to see be improved on year after year. As you can see, it's looking phenomenal. Every single year there has been massive growth, which makes me so excited about the future of this company. In conclusion, Crocs is now undoubtedly one of my favorite companies. Every part of their financials that I've talked about in this video has been perfect. I have absolutely no criticism for them. When it comes to buying this stock, I think right now is probably the perfect time as they have been getting killed recently. They're currently trading at about $75 a share and they were at around $130 to start the year. So two things I want to mention before I end the video is my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the categories I cover, then I tend to stay away. Secondly, I also want to point out that I'm not a financial advisor. I'm just a guy speaking my opinion on stuff on YouTube, so I highly recommend doing more research before coming to the conclusion of buying or selling any stock that I talk about. If you guys have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching and have a nice day.